All right, traders, it is the 18th of July, 2017. My name is Jameson. Welcome to Behringer Trading. We're looking at a daily vertical bar chart of Clmt, Clmt Specialty Products Partner. This is the materials sector, which has actually been doing pretty well. The index specifically is what are we looking at? Specialty chemicals here. But we have a bullish RSI breakout. The STO is bullish, and we've actually broken out of this consolidation that's here. And while doing so, we have it looks like a golden cross, right? The 50-day has crossed a 200-day simple moving average and is now rising. So the intermediate term is now rising. The 200-day simple moving average looks like it has been confirmed as support. But more importantly is that we do have this solid basing here. And the character at which that we have broadened this base of support is characteristic of that of accumulation. So we do have kind of some climactic selling, a nice solid retest. So, here's our selling climax, automatic reaction, secondary test. There's our stopping action. And then we have several other retests. This is probably phase B here, the accumulation of supply. And then this transition from volatility to this kind of boring drop here with narrowing price spreads and contracting volume with the exception of through this middle here. Just suggests that supply is having a difficult time overcoming demand. And I might even suggest that this volume surge here through mid-March, mid-February to mid-March here is very characteristic of this big reward, little effort here. Reward, no effort. Which in retrospect looks like it was bullish absorption. And then we have this breakdown here, creates a little spring. This is likely our terminal shakeout, and this is a retest of that spring. Now here's the thing, I don't want to throw terminal shakeout out loosely because a terminal shakeout should come after a sign of strength. And we really don't have a clear, well-defined sign of strength here. There's nothing that jumps out and suggests that demand is overcoming supply. So I didn't label this chart, but this is just a spring. This breakdown is a test of the spring. And it's important because you can see that as prices break down and then we retest that, if you look at the volume relative to those sessions, there's no selling, there's no supply. And then prices break through this level of resistance, the 50 and the 200 simple moving average, with increased ease of upward movement and expanding volume. That's demand. That is, and on top of it, that's a new high here for 2017 and the end of 2016. And then prices pull back and we consolidate. Look at where we're pulling back and we're consolidating. We're pulling back and consolidating around previous resistance. It looks like we're confirming prior resistance now as support. And if we look at the amount of volume on the down days here, we can see there's some selling here. There's more buying. We pull back again, there's less selling. There's buying. And we pull back again, there's even less selling. We can see that contracting, that the supply is contracting. This looks like we're in strong hands. And now we rally out of the consolidation, out of this wedge here, an expanding volume. That's pretty bullish. So we take the amount of time spent in consolidation. This gives us a conservative $5.20 price target and then a $6 price target. Now, given the rally, today we actually rallied about 4.71%. So you have a couple things. One is you can just go long, and now your downside risk is maybe today's close. My tolerance is about a 6% stop loss, so I might suggest taking a 50% or half of your anticipated position. In other words, if you have $3,000 you're interested in investing, maybe use $1,500 of that, and that way if we pull back and we test this 200-day simple moving average, this is about 8%. If it pulls back there, you're still around 4%, which means that we can kind of dip a little bit lower and tolerate a retest of this area, and we could actually add to the weakness that's here in anticipation of this is being accumulation and marking up. The next is you could just enter a full position and then stop out if we wash out the lows. Bottom line is I think that we're confirming this level of resistance here as support, and your risk reward currently, if you're going to use today's close and a 200-day simple moving average, you're looking at about a 1 to 2 here. But if we're looking at a 4.5 to 8% downside in a 200-day simple moving average, we have a 30 to 35% return here into the $6 price target. Very, very nice setup. I like that volume's expanding. We can see that relative to the Vanguard Total Market stock market fund that we are showing that we're breaking out, right? We're breaking out relative to the market. There's some bullish relative strength. We're breaking out relative to the index. That's bullish relative strength. The material sector continues to find participation, and the index is just kind of pulling back. So if we start to see the index itself start to the increase in participation or even rally, there's a good chance here that CLMT is going to start to see some increased buying pressure, which increases the odds of trading into the first and second price objectives. All right, so that's CLMT, and I am bullish with the tolerance as long as we're trading above this 200 simple moving average. Good luck, traders.